As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
You've been describing the death of the dollar and how it's being propped up like the corpse at Weekend at Bernie's. So that's a distraction away from the alternative, which would be real monies, silver and gold. So what is there that this head fake is actually being practiced on the other side by the powers that be, that governments, central banks, and others really do recognize the importance and value of gold and silver more than they're letting on, so that they're distracting us to continue to have faith and confidence in this debt-based fiat dollar while they're taking actions over on the gold and silver side?
Well, basically, they want a seller for what they're buying. They're buying gold. They're not going to say, we want the public to buy gold because we like it too. No, they're more evil than that. They're saying gold is worthless, doesn't pay a yield. They put out these clowns like Warren Buffett. Warren Buffett is a total liar and a clown. He comes out and says it doesn't earn a yield. Well, he's a liar, because he was earning a yield for about 3 or 4 years with his buddy Hank Greenberg, selling option calls on silver until he was called away, and then he lied again and said that he sold his silver too early. No, he was called away into a forced sale because he was earning 8 to 10% a month income on his silver holdings. What they want you to do is give up your gold and silver so that they can buy it at the cheap price. That's why they suppress the price.
That's the old bash and stash technique from Wall Street?
Well, sure. It's easy to do because they own the press. I don't know if people are aware, but in the 70s there were 25 different companies that owned the press in the United States. I'm referring to broadcast, print, radio, and I don't know, the magazines, whatever. There were 25 companies. Now there are 5. And the trust of the press has gone from something like a 40% figure in the 70s to about a 20% figure now. So, with the consolidation of the press networks at a corporate level, they've lost their integrity. But I'd like to point out some details that are not well known. Clinton, Rubin, Papa Bush, they stole Fort Knox. It was 8,500 tons. They stole it. The people in Kentucky know full well what happened, because armored trucks entered Fort Knox in caravans, like, 4 or 5 at a time. And they all rode high. That's the terms for the vaulting industry. The trucks rode high, which means that the height of the body of the truck was far off the ground. When they returned, they all rode low. And the Kentucky natives, they understand it very, very well. So for month after month after month after month, Fort Knox was drained during the Clinton-Rubin administration. What they did was they created a 0% gold lease opportunity. So just available for the Wall Street banks. You couldn't have borrowed that gold for 0%. No, they borrowed it at 0%, and then they put on short contracts for the gold market and futures, and with the proceeds and the money left over, they would buy mountains of long treasury bond contracts. So the Clinton administration likes to talk about the decade of prosperity. I talk about the decade of stolen prosperity, because the proceeds from the gold financed the reduction and rally, the reduction in bond yields, and the rally in U.S. government debt via the treasury bonds. So the Wall Street mavens made somewhere between $2 and $3 trillion on a leverage basis from stealing Fort Knox. They didn't get rid of that gold. They stored it. And what I've come to learn, see, there's a big question. We all know that there's a lot of naked, well, we don't all know. The enlightened people who follow the gold industry know that there is a tremendous amount of naked shorting of gold futures contracts and silver futures contracts. By that I mean they sell a contract and never deliver the contract, never maintain the margin calls, are forgiven on it, roll it over to the next month, add on more short contracts, and since they don't maintain the margins, since they never deliver on the contract, they're called naked shorts. They're illegal. But the big banks in the United States are not subject to laws. They ride with impunity. So the big question has been going on for 10 years. If the big banks of Wall Street have all these huge short positions, who's got the other side? And the answer is the executives to the firms. The CEOs of the Wall Street firms have enormous gold commitments. They are the counterparties for the shorts that their companies hold. Companies short, executives long. It's nice balance. And it's actually an argument that goes against the likelihood of a force majeure, which means, well, due to economic situation and whatever, the whole nation's under siege, so we're going to cancel out these entire contracts. I don't think they will. I think they're going to gut those companies and make them forced into bankruptcy. Because as they go into bankruptcy, the long contracts will be held by those executives. And where do they hold them? The company's called the Carlyle Group. They're often interviewed on respectable shows that have other harlots. But the Carlyle Group has lots and lots of Wall Street executives as investors. And this was all revealed by Jim Sinclair, who I'm actually in touch with once in a while. He's a great guy. He's got his own background. So, you know, you've got these Western central banks, and they realize that a return to the gold standard would cripple the U.S. economy. So they're protected. They know the gold standard's coming, but they're protected because they, as individuals, own tremendous holdings, tremendous assets in gold. And they're largely not in the United States. If they're not in the Carlyle Group, they're held in Caribbean locations, Swiss locations. So the risk for the return to the gold standard is to send the United States to the third world. No bankers in power, notice, ever cite the Austrian School of Economics and its teachings.
But a lot of our guests here on Reluctant Preppers do, so please continue.
Well, it's about sound money. They explain in the Austrian school what happens to not just a society, but to an economy and the structures of a nation financially. They all disintegrate. They decay. They fall apart. And that's what's happening in the United States. QE is not a revitalization. QE, the bond monetization, especially since it's unsterilized. I'd like to explain that. If the Fed decides, all right, we're going to buy $40 billion of Treasury bonds this month, but we're also going to remove $40 billion from the banking industry so as not to change the money supply. That's called sterilized. They're not doing that. They're just adding money to the system. It's unsterilized. It is acidic, hyper monetary inflation that they all know well and good from their studies. It destroys the financial structures. It kills capital. Now, I'd like to explain real briefly how it kills capital. As the Fed prints money, unsterilized, so just pure injections, what's the response by the system? Well, they see that the dollar is being undermined, so holders of Treasury reserves in foreign countries, they start selling, they start diversifying out, they start buying more gold, they buy more maybe huge energy deposits, so they diversify with a hedge into something that's hard asset and tangible. What do other companies do? Well, they start, doing things that are anti-dollar. They do the same thing. They invest in, say, a copper mine in Peru. They invest in something tangible, hard asset. They lighten their load of the treasuries that they hold as debt securities. So what happens to the global economy? Well, the prices go up. The costs go up. I've been making a big distinction for 3 years. It's not just a matter of price inflation. Where are the prices rising? It's the costs. The costs are rising from QE. As costs rise, the companies that sell products cannot raise their prices for end products so easily. So the result is that they have a squeeze on their profits. Then you have all these companies going into liquidation because they're failing. So they liquidate their inventories. Again, more downward pressure. You hear about the word deflation, which I hate the word deflation. People don't define it. They just use it without knowing what on earth they're talking about. So the result of QE is a squeeze on profit margins that shuts down businesses, forces liquidation, forces job cuts, and forces a feedback loop into the system where even fewer people have money in their pockets to keep the economy going. And then stage two, after, say, several months, we're into our fourth year of QE. So we're into several feedback cycle loops where the capital is being destroyed. And by that I mean the equipment is turned off. It is retired. It is liquidated in cases, or it is just shoved in a big warehouse. All these different widget making machines, all these different telephone and computing machines, all these networking relay racks and disk drives, they're not used. This is what QE is doing. It's killing capital on a global stage.